Welcome back, and we're going to go a little bit further into the way you can defer taxes forever, and that's the 1031 tax deferred exchange. This is something I've been involved in with investors hundreds of times. This is just something that it's just kind of just keeps on building. You know, it just sells something and you buy more and you buy more than one for one. And so we're going to go into the advantages and the way that you can build wealth by doing this. So let's talk about a normal exchange versus a reverse exchange. A normal exchange is what you're going to do. And it's going to start with the sale of the property. In other words, what you're going to do is you're going to say, okay, I want to take this property and take the profits and then buy something else. The reverse exchange starts with the purchase of properties, and instead of, selling your property first. And previously, I talked about this. Reverse exchanges are very expensive. They're typically used on larger commercial transactions. So a normal exchange is probably what more than likely you're going to do. That like-kind exchange for whatever it happens to be. Single family for a quadruplex, whatever it happens to be. We went into some details about that, but I want to kind of give, again, some limitations to it. The IRS lost this deal with the Starker family, and so they weren't happy about it. So they set some strict guidelines, and they are very strict. So once that property closes, you've got 45 days to identify the properties that you want. That's what you have to do. If you do it on the 46th day, it's gone. You cannot do it, all right? They're not going to allow it. They've got to be strict on the numbers. But from the day of closing of the subject property, you have 180 days. And that 180 days allows you to buy new construction under construction if you want. Now, I will tell you, you don't want, again, and I may have said this before, don't do something that goes up to that 6 months. It's nerve-wracking. Subcontractors can slow you down. Weather can slow you down. You never want to take it up to the last moment. I typically, when I do a 1031 on new construction, I find something that is at least framed, has a roof on, working in the interior. Normally that's 90 days. Worst case scenario, it's 120 days. So, if it's an existing property, it's immediately. If it's a new property, don't do something out of the ground. Do something that's under construction, significantly under construction, so you don't have a situation that 181 days later, you have a lot of taxes to pay. Now, the reverse exchanges, as I've said before, they're complicated, they're expensive. If you're in the commercial business with a, 10, 20, $30 million type stuff, the expense is kind of minor compared to the size of the transaction at that point. So the normal exchange is going to be what you're going to be doing. I think of it as a tax-free loan from the IRS. Think about this. You take $150,000 profit, all right, and you say, I'm just going to roll it into more. I made all this money, but now that one property becomes 3 properties, all right? It's like saying, okay, I get a tax-free loan, I get an interest-free loan too. So it's fantastic in terms of how it works that way. But let's take that $150,000 and let's say that, well, I need $25,000 right now to do some things. And so you can separate that out. You can make $125,000 put into the 1031 tax deferred exchange, and then $25,000 you can pay taxes on. So that option is open to you if you want to do it. So they are taxable if you do that. And again, please don't miss your deadlines. Now, we talked before about the fact that we have a third party that's going to be handling all this, and you're going to be set up by a professional, by somebody that's a specialist, and title company with the right company. So here's the thing. You can keep doing this until you die. And you get the ultimate, I hate to be morbid sounding, but you get the ultimate tax break, which is death. So what happens, this is the fantastic thing for your heirs. You probably have paid for properties, and we talked about paying those taxes, the depreciation and the capital gains, goes away, disappears. That's essentially how it works. Again, check with your tax professional, but the thing is you get what's called a stepped-up basis. And so they kind of start the clock over again. So they get a tremendous benefit from you in that particular respect. And you've been able to take your profits and not have to pay any taxes on them. So This is the thing that's different about real estate. Stocks, other things, buying and selling, you're going to pay fees. Selling, you're going to pay taxes. There's just pretty much no way out, and that is fantastic. So again, the fantastic thing is it's, it breeds. All of a sudden you have a litter of houses in a way by selling one, using the profits that you made on a good deal and buying 3 more anywhere in the United States that suits your fancy and is the place that you want to be. So 1031s are something that are outstanding. They're unique to real estate. I love doing them, with investors because first of all, it's a victory for the fact that they have a house that's been positive for them and they have a winning strategy of being able to increase the amount of properties that they own without having to pay taxes. So that being said, we're kind of at the end of the road here, except for one thing. And I'm going to talk about how Oklahoma City is an ideal market. Now, the reason why I'm saying this, that it's an ideal market, well, it's my market, okay? It's the market. I do Oklahoma City and Tulsa. But the thing I want to do here is not necessarily sell you on, the Oklahoma City market, but I want you to understand how the dialogue is going to be with whoever you deal with. All right. I couldn't do this in Nashville. I couldn't do this in Chicago because I don't live there and I don't know that market very well. But I hope that you'll kind of stay through this section and listen to it because it'll give you an indication about how a specialist in real estate investments is going to talk to you and talk about their city, about why you should be there and what the advantages are. And it's going to be positive. It's not going to be something where we're going to talk negative about another market. We're just going to say, this is what's good here. And if this matches up with you, this kind of a market is what you want, or a different kind of a market is the kind of place you need to be. So hang in there, just one more. This is it. And we'll kind of start a dialogue about how you talk to your real estate professional. Stay tuned.